In the world of mortgages, the 30-year loan reigns supreme. But did you know there's a less common option, the 40-year mortgage? This type of mortgage stretches your payments over 4 decades. It sounds like a long time, right? Well, it is. These mortgages aren't as readily available as their 15 or 30-year counterparts. You won't find them at every lender. Big banks and traditional institutions usually stick to the standard terms. So, where do you find one? You might have to dig a little deeper. Think smaller banks, credit unions, or specialized mortgage brokers. They often have more flexibility in the types of loans they offer. Just like other mortgages, 40-year loans come in different flavors. You can get a fixed-rate mortgage where your interest rate stays the same for the life of the loan. Or, you could opt for an adjustable-rate mortgage where the interest rate can fluctuate after an initial fixed period. Some 40-year mortgages even come with interest-only periods at the beginning. This means you'll only be paying interest on the loan, not the principal, for a set amount of time. This can free up some cash flow in the short term, but it's important to understand the long-term implications. The main draw of a 40-year mortgage is right there in the name: lower monthly payments. By spreading the loan over a longer period, you're reducing the amount you pay each month. This can be a game changer for some borrowers, especially those who are stretching their budget to buy a home. Imagine a young couple just starting out. They've found their dream home, but the monthly payments on a 30-year mortgage are a bit too steep. A 40-year mortgage could be the answer. The lower monthly payments could make homeownership attainable for them. That's not the only potential benefit. Remember those interest-only periods we talked about? They can provide some flexibility in the early years of the loan. Let's say that same young couple is planning on starting a family soon. An interest-only period could give them some breathing room in their budget while they adjust to the costs of parenthood. But before you jump for joy, remember that every financial decision comes with trade-offs. The lower monthly payments of a 40-year mortgage come at a higher total interest paid over the life of the loan. We'll dive deeper into that in the next section. While the lower monthly payments of a 40-year mortgage might sound enticing, it's crucial to consider the long-term financial implications. The most significant drawback is the amount of interest you'll pay over the loan's lifespan. Remember, you're paying interest for an extra 10 years compared to a 30-year mortgage. Let's look at an example. Imagine you take out a $250,000 mortgage at an interest rate of 4%. Over 30 years, you'd pay approximately $180,000 in interest. But stretch that same loan to 40 years, and the total interest paid jumps to over $240,000. That's a significant difference. Another important factor to consider is equity buildup. Equity is the portion of your home that you actually own. With a 40-year mortgage, you're paying off the principal at a slower rate. This means it takes longer to build equity in your home. And here's another thing to keep in mind. 40-year mortgages are often classified as non-qualified mortgages. This means they aren't subject to the same consumer protections as traditional mortgages. You might encounter less favorable terms, higher fees, or even riskier loan structures. So, is a 40-year mortgage ever a good idea? It depends. If you're struggling to afford the monthly payments on a shorter-term loan, it might be a temporary solution. But it's crucial to weigh the long-term costs and consider alternatives. A more affordable home is always a good starting point. Don't overextend yourself just to get into a bigger or fancier house. Remember, your home should fit your budget, not the other way around. If you're a first-time home buyer, explore government-backed loans like FHA loans or VA loans. These programs often have more lenient requirements and can make homeownership more accessible. Another option is to consider discount points. This involves paying an upfront fee to lower your interest rate on a shorter-term mortgage. Ultimately, the decision of whether to pursue a 40-year mortgage is a personal one. Carefully weigh the pros and cons, consider your financial situation, and don't hesitate to seek advice from a trusted financial advisor. Remember, your goal is to find a mortgage that fits your budget, helps you build equity, and sets you up for long-term financial success.